It's almost 1 p.m. in Sydney and 11 a.m. in Hong Kong. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Asian stocks gaining as bonds tumble, with strong US retail and jobs data bolstering hopes of a soft landing. That economic resilience also prompting traders to shed bets on big rate cuts. JD.com shares surging in Hong Kong as profit beats expectations. Alibaba also gaining despite revenue missing estimates on weakness in core e-commerce. Plus, Indonesian President Joko Widodo about to give his final State of the Nation address ahead of a budget that could push the deficit close to its official limit. All right, let's check in on how markets are faring. Looking like a very positive day to close out the week. Avril Hong's in Singapore. Avril.
Yeah, I think markets have that Friday feeling, don't they, Paul? We're seeing that rally across the board. Japanese equities doing really well today. And of course, this is coming against the backdrop of what we saw on Wall Street overnight after data that pointed to the soft landing. The jobless claims falling for a second week to the lowest level since early July, easing those concerns about a labor market deterioration. Then, of course, we got the retail sales number that accelerated in the US as well by the most since early last year. So all in pointing to this resilient consumer. And we actually saw, as you mentioned a short while ago, how Treasury slumped overnight. Traders paired expectations of aggressive Fed easing. But if you flip the board and take a look at how earlier this month, the main Bloomberg gauge of Treasuries actually broke out to trade above the 200-day moving average. And this is something we haven't seen since early 2022 when inflation started becoming a problem. Indeed, one Fed official signaled it may be time to tweak monetary policy accordingly. Have a listen.
From my perspective, the risks to both sides of the mandate seem more balanced. Accordingly, the time may be nearing when an adjustment to moderately restrictive policy may be appropriate.
All right, let's bring in our guest, Eugenia Victorino, Head of Asia Strategy at SEB. So, Eugenia, we've now got the market pricing in a bit less than 100 basis points cuts from the Fed for the rest of the year, but that's still pretty much a cut at every single meeting between now and year end. Do you think that's realistic, or is the market getting ahead of itself again?
Well, clearly, considering that the inflation remains very favorable for a cut, it's really only a question of whether the Fed will start with a bang at 50 basis points or will they be happy with 25 basis points in September. Our base case for now is that there would be a 50 basis point cut in September followed by 25 and 25 for both November and December. But at the end of the day, it really depends on what we will be seeing in the employment numbers, because from now until the September 18th Fed meeting, there would be one whole round of data. And what's really at stake here is whether there is a sudden deterioration in the labor market. Right now, we're not seeing that.
What is your sense of how squarely we are in this soft landing scenario?
Well, right now, the market has priced out the no landing, but we're still seeing some pricing in of a landing. But it's only a question, is it a hard landing or a soft landing? But for now, the data is suggesting it's just a soft landing. And in fact, even if you have an increase in the unemployment rate, it's really because there has been more supply of labor rather than a massive cut in the generation of jobs. Overall, you still have a resilient U.S. consumer.
Okay, amid all this repricing that's going on, something that seems to be happening also is a pickup, it seems, of the yen carry trade coming back in some parts. What is your sense of, whether this has legs?
Well, I don't really think that there would be a lot of persistence in that trade. Having said that, when you're talking to a trader, they just can't let go of that easy carry. But carry only works when there is very little volatility. So when there is volatility, you better make sure that you can square off that carry trade fast enough. Otherwise, you would be swimming in losses.
Yeah, to that point, we have seen this movie before just about a week ago. Are we setting ourselves up for another very vicious unwind here?
Well, I would think that the biggest impact of the unwind of the carry trade is already over. But if I were a trader, I would be looking at dollar bounces to exit the massive long dollar positions that have been accumulated for more than a year. But, there are still lingering long dollar positions, and some of them are actually even adding to that. But I wouldn't be all in right now because clearly the Fed is going to cut. It's only a question of its 50 or 25 basis points.
And you could say the same about the Bank of Japan. And clearly it is going to tighten. It's just a question of when and how much. What's your view on that?
So our view is that the BOJ would have space to continue its hiking cycle, but possibly it would be in December. So our view is that there would be a 25 basis point hike in December, followed by another hike in Q1. Having said that, it would only take the peak rate to around 75 basis points, which is still below what the BOJ estimates as their neutral rate of 1%.
But we also have the BOJ coming under a lot of fire after being blamed from the stock market rout, right? And, the unwind of carry that we saw because of the communication. And speaking of communication, WEDA is set to appear before politicians in Parliament next week. Do you think then that prompts perhaps a more dovish tone in order to appease politicians?
It's very difficult to remain dovish on Japan right now because clearly the momentum is picking up. You have inflationary pressures that are still around the target. So it's difficult to say that you need to keep easing. As it is, even if you're tightening at the margin, the BOJ still controls a very big part of the bond market, and that cannot be sustained.
But as you say, even if they tighten, it's still fairly loose, right?
Exactly.
So where are you looking at in terms of dollar-yen?
So our base case is that it would actually go down to around 143 by the end of the year. And that's really driven by the Fed, not by BOJ tightening, because you're only talking about 25 basis points more, whereas the expectation for the Fed is almost 100 basis points cut. No matter where you do the math there, it's going to be a narrowing of that rate differential.
We're also keeping an eye on Jackson Hole.
Yes.
What are you watching out from there?
Well, clearly they would all be talking about the labor market because right now the inflation is very favorable, so it's only now a question of the demand. I would expect that they would really be opening the space for cuts, but I don't think that they would want to commit themselves to a massive cut because they have one more round of data and it's just too close to call at this point.
All right, Eugenia Victorino of SEB is going to be sticking around. We have plenty more to discuss. Still to come, Axis Mutual Fund is going to be joining us to talk about their outlook on India's banking sector, and that's as recent earnings show lenders' asset quality is deteriorating. This is Bloomberg. China's central bank chief has pledged further steps to support his nation's economic recovery, while cautioning that it won't be adopting drastic measures. For more, China correspondent Min Lo joins us in Hong Kong. So what were the key points, Min, that Pang Gongsheng was making?
Yeah, he gave an interview to state media, but it was quite ambiguous comments there because he said that there should be policy stability and patience, that there shouldn't be any drastic easing or drastic tightening. Obviously, the Chinese economy now doesn't warrant drastic tightening given the not very inspiring economic numbers that came out yesterday. Yes, there was a bit of rebound in retail sales, but that was coming off very weak, a very low base in June where there was a big miss back in June, and there was this unexpected decline in fixed asset investment as well. Now, Pan mentioned, he reiterated that the PBOC is now shifting emphasis away from quantitative targets like the MLF. And yesterday, they had delayed the announcement of the MLF to August 26. And Bloomberg Economics believes that there'll be one more rate cut coming in the fourth quarter. But after the data yesterday, more economists are now expecting that maybe the PBOC could cut another 20 or maybe 30 basis points more later this year just because markets markets are pricing in more cuts now from the Fed. And also it depends on the trajectory of the Chinese economy as well later this year. Pan also talked about the need to promote price recovery, which suggests that, yes, the government is taking note of this persistent deflationary pressure in the economy that is causing companies to pull back investment and consumers to pull back spending as well amid this fear around income growth. He touched on the property sector but didn't allude to any new measures. Instead, he reiterated the existing 300 billion yuan in relending facility and said that, look, the down payment ratios are already at record lows of 15% and interest rates are already low. He said, yes, the monetary policy will continue to be supportive. That's what they have always been saying, but he didn't really exactly spell out what more steps that they will be taking.
What about stock market recovery, Min Min? I mean, are we seeing more signs that the national team is stepping in? The CSI 300 climbed just after the data dropped a day ago.
Yes, yesterday, I mean, minutes after the data drop, you saw the stock market rebound, which some analysts are saying, look, the numbers are not that optimistic. Just if you look at the overall trend, and yes, there's a fingerprint of the national team all over it. If you look at the usual suspects, the ETFs that are favored by some of those state-backed funds, there was an increase in volumes yesterday, and year-to-date so far, the national team has already contributed about $66 billion to the ETF market, and now Bloomberg analysts expect that they could contribute to about $100 billion in the onshore ETF market by the end of this year, making up about 25 to 30% of the onshore market. So that's a huge amount that they're pouring in to support the stock market there. You still see that there isn't this shift in the fundamental sentiment and the fundamentals of the economy. That's why investors are still piling onto the bond market. You're still seeing a rally for weeks on end despite government interventions there. And it looks like, the sort of aggressive stimulus that traders are looking for, based on what Pan Gongsheng is saying in that interview, that sort of policy is not really forthcoming for the rest of this year.
All right, Bloomberg's China correspondent Min Min Lo there. Well, let's get back to Eugenia Victorino, head of Asia strategy at SEB, still with us. Eugenia, would you be a buyer of Chinese equities at this point? They're very cheap.
Well, there is a reason why they are cheap. Some of the Chinese names are still very aggressive in their share buybacks, and that should a return to the investor. Having said that, we're not just looking at a subdued momentum in the Chinese macroeconomy. We're also looking at the lack of pricing power. And in fact, the Chinese corporates, the landscape is very competitive. So they're not only looking at subdued volumes, but you're also looking at even more aggressive price cuts. And that's going to have a limiting factor on the earnings profile for the Chinese equity market. But as I said, when the valuations are just too attractive, it may already be an attractive time to go into a strategic long position on certain sectors in China.
Yeah, that was going to be my next question. I mean, if you were to get long, what sort of sector would you look at, or any particular name?
Well, as I said, these Chinese companies that are very aggressive on their share buybacks, in particular the big Chinese tech firms, they're still quite good. And the investments on the AI sector is still quite good. But I would also be very wary of the sectors that are not necessarily going to have policy support. In particular, I would still be avoiding the property sector. I would still be avoiding the construction sector, but possibly the OEMs and the auto sector are already quite attractive.
As Min Min was mentioning earlier, we're unlikely to see aggressive monetary easing, and we might see some form of fiscal support going ahead. What kind of spending and in what form do you think is the most realistic to expect here from China?
Well, clearly, we've already seen the different ways that they can say it's going to be a gradual support, like gradual, calibrated, nothing drastic. We've heard the same message for more than a year, and I think right now the risk is that they would actually deliver a great fiscal support, because what they want is just to provide a bottom. But there's also the problem that the market is just so expecting a further easing in the monetary policy, and that's also driving the continued rally in the bond market. So right now, the CNY or the yuan is already quite stable. So the focus now is to prevent further declines in the bond yields. But when you have a very subdued macro outlook, it's difficult to really put a floor on the bond market, and any aggressive monetary policy is just going to undo any of those efforts.
This week we saw the RBNZ and yesterday the BSP easing. Are we firmly switching into easing mode in this part of the world?
Well, definitely, yes. We've been seeing some central banks in the region that are just trying to take its cue from the Fed, because their inflationary backdrop have already been quite open for an easing. But the barrier that the Fed had put in place a few months ago was just too strong. But now that the expectation with the Fed is whether it's 50 or 25 basis points, but it is a cut, then that I would expect that the other central banks would also be on that bandwagon. But RBA is not going to be one of them, because the Australian central bank has already said that there is still some way to go for them to even consider an easing. So peer pressure is not going to be an issue for RBA.
And that is among your conviction calls, right?
Indeed.
Aussie, Kiwi. What else do you like?
Well, while I expect that the yuan would appreciate against the dollar towards 710 by the end of the year, looking at the backdrop of the Chinese economy, I would expect that the yuan would actually underperform its trading basket, and we've already seen the renminbi trade-weighted index go down, and that's going to go down further, in my view, in particular, most likely against the euro and the yen.
Eugenia, do you feel there's much risk of a yuan carry trade unwind of a similar scale that we saw with the yen?
Well, the carry trade in the yuan, I've always been wary of the carry trade in the yuan, simply because the ability of the Chinese authorities to control the funding or the cost of funding in the yuan makes it very difficult to ensure that you have a proper carry to expect. And we've seen that carried out in the funding market in the offshore. Having said that, when you're looking at the rate differential between the US and China, that's not necessarily narrowing in favor of the yuan. And it's also because of easing expectations from the PBOC. And as I said, the bond rally in China is not necessarily helping the rate differential.
All right, Eugenia Victorino of SEB, thanks as always for joining us. We have plenty more to come. This is Bloomberg. All right, we've got some live pictures for you out of Indonesia, an historic day. We're about to hear from Joko Widodo, also known as, well, his nickname is Joko. He's going to give his final State of the Nation address. He will also deliver the budget, so he'll outline those plans. Well, we've got the feed coming in and out here, but this is the last time we're going to hear from Joko giving his State of the Nation address. The budget will be delivered as well. We're expecting a shortfall, which brings Indonesia perilously close to the top end of its GDP of around about 3%. Will be in the range of 2.3 to 2.8%. And there's some big ticket items that Indonesia's spending on, April.
Indeed. I mean, we're also watching really closely out amid this political transition for what the next leader, Prabowo Subianto, has in store for Indonesia. I mean, there is a lot of concern whether he will carry through some of Jokowi's policies. And this includes the changing over to the administrative capital, no longer Jakarta, the transition to Nusantara, and the inauguration of this new capital city is also scheduled for tomorrow. Here's a look at the new city's progress.
Carved out of the jungles of Borneo,
Indonesia's future capital, Nusantara. It's located around 1,200 kilometers from the current capital, Jakarta. An ambitious project spearheaded by Indonesian President Joko Widodo. It's funded by a mix of government and private spending. Construction for the massive project began in 2022 at an estimated cost of $35 billion, with reports of massive cost overruns. The aim? To build a futuristic green city in place of overcrowded Jakarta, a capital that's rapidly sinking into the sea. About 40% of Jakarta sits below sea level, and its coastal areas are under constant threat of flooding. This causes about $6 million of losses each year. Productivity losses from traffic gridlock are estimated at $7 billion a year. Though it's being inaugurated this month, Nusantara is not scheduled for completion until 2045. Satellite images in the past few years show the development of the area. But on the ground, missed deadlines and sudden resignations of top officials plague the project. During a recent trip to Nusantara, Jokowi stressed that building a new capital is not a job that takes 1 or 2 years.
We came here to check the latest progress of the Ibu Kota Nusantara, especially the construction of the palace. I see everything is still in process.
President-elect Prabowo Subianto has pledged to continue development of the city. Yet his manifesto makes clear he'll focus on his own policies, casting some doubt on Jokowi's legacy project.
All right, let's get to the top story that we're tracking in Thailand. The daughter of former Thai leader Thaksin Shinawatra has been formally nominated by a coalition party as Thailand's next prime minister. 37 years old, Paetongtarn Shinawatra, backed by an 11-member coalition, which has a majority in the parliament. The court this week dismissed Prime Minister Srettha Thavisin over an ethics violation. Let's take a look at how Southeast Asian foreign exchange is tracking at the moment. Some of these emerging market currencies coming under a fair bit of pressure at the moment. We've got the Thai baht holding steady, 35 against the US dollar. The Malaysian ringgit has been getting a bit beaten up of late, leading the slide, of course, as traders start to trim their Fed rate cut bets. The Indonesian rupiah depreciating a little, 15,733, and as we mentioned, we're going to be hearing from Jokowi a little bit later. Final State of the Nation speech today. He'll be delivering his 2025 budget as well, and as we just explored, the new capital city, one of the big ticket items in that. We'll see if his successor Prabowo continues with that. Got some live pictures for you from Japan. Got a typhoon approaching there, so we'll be keeping an eye on that as it closes in. We have plenty more to come. This is Bloomberg. Welcome back. China markets looking like this, heading to lunch. We've got the CSI 300 kind of flat right now. We have had some evidence that the national team's been back buying, however. We did hear from the PBOC governor a bit earlier as well, saying, well, there's not going to be any drastic new measures of support for the Chinese economy. So shares kind of flat in China at the moment. Let's take a look at a couple of other stocks that we're tracking, however. Alibaba, JD.com, both reporting results. A bit of a mixed bag for Alibaba. JD.com announcing a pretty handy set of numbers. That notwithstanding, both those stocks in positive territory at the moment. JD better by more than 8.5%. Well, Bloomberg Intelligence senior analyst Catherine Lim joins us now. And Catherine, let's start off with Alibaba. Those shares seem to be holding up despite the headline misses. There were a few bright spots in there, though. What's the reason for the support?
Right, Paul, tell me about it. And really, I think the bright spots are coming from the fact that look at their cloud business. We've got revenue growth accelerating from prior quarters. And more importantly, despite the price cuts that we have seen in the quarter itself, profitability margins, they're up on a roar, and really good, numbers that has come through for the cloud. More importantly, the company seems really confident about, those numbers accelerating and gains widening over the next couple of quarters. So that's definitely the bright spot. Notwithstanding, I'm going to throw in that, the local services business, one of the consumption highlights, that's where we've actually seen narrower losses. And it's actually coming in, smaller than what we were expecting. So that's also another thing to actually watch for.
So some cause for optimism, but what is your sense of whether we're making progress towards that China stock link and how much that could actually go on to boosting Alibaba stock eventually?
Right. I guess, Avril, they've actually reiterated, and clearly this is not the best environment for us to be actually seeing Alibaba monetizing some of the efforts that we have seen the company put in over the first 6 months of 2024. I mean, we've got China retail sales out yesterday. We've got companies like Li-Ning cutting back on sales forecasts. So it's going to take time, notwithstanding. And I think, the key period to actually watch out for Alibaba would be the Singles Day. That is the fourth quarter of this calendar year. Let's see how they do then.
We've seen Alibaba's stock price take a bit of a beating over the past year. It's off, rough calculation, looks to be more than 10% anyway. What are analysts saying about the outlook for the price?
Right. Do you know what? I think one thing to actually watch out for is that the company will be holding their AGM on the 22nd of August next week. And they are looking to actually get approval for the primary listing in Hong Kong. Following that, this stock could actually be a beneficiary and participate in the Stock Connect. And we're going to see some of the flows that may actually be beneficial for the overall, valuations detraction for the stock itself. So that is definitely a catalyst worth watching.
Catherine, we also are watching JD.com after its revenue gains. What is your sense of, whether this kind of cements the idea that it is going to be the continued winner in China e-commerce?
Right. So, Avril, this is a much simpler business, JD.com, the retail itself, and it is very China-centric. Kudos to the company for the top line beat as well as, the profitability, holding up at levels last year itself. I think, but it's too early to really judge because we're going to get PDD numbers coming through. We're going to get some of the Meituans. And I think right now the question mark really is that, in this kind of environment, what competitors even like Douyin and Kuaishou will be doing on the e-commerce side going forward.
Catherine, thank you so much for sharing your analysis with us. Catherine Lim, Bloomberg Intelligence Senior Analyst. Now, here's a look at how markets are trading. We have Japan back from the lunch break. And of course, today we've been seeing them outperforming in the region. And this against the backdrop as these Asia stocks rally, tracking Wall Street thanks to data out of the US overnight that really support the sense that we're getting a soft landing in the US. And if you look at what we're seeing on the topics, if you flip the board, it's very interesting to see that turnover seems to be picking up, which tells us that we might be seeing dip buyers re-emerging amid the backdrop of the recent onslaught in Japanese equities. And this is notable because we are, after all, in the peak summer season. We are seeing dollar yen still above the 148.5 level. This is after that, rally in the yen a couple of weeks ago. Now the recalibration of what we're going to get from the BOJ, what we're going to get from the Fed. In the meantime, we've been seeing how a popular yen-centered carry trade that blew up spectacularly 2 weeks ago, well, that appears to be creeping back. And Nomura says it's seeing a variety of investors start borrowing the yen again to invest the proceeds elsewhere in higher yielding assets. For more on this, let's bring in Bloomberg M Life strategist Mary Nicola. So, Mary, what is your sense of how how this carry trade is picking back up despite the volatility that we've been seeing in the yen.
It's amazing how short-lived our memory is and how we have forgotten what has happened last week. But I think one of the key things, and we've been harping on this on the MLive blog, is that you don't have an alternative funding currency at this point. So it makes the yen look a lot more attractive. Obviously, because of the unwind in the carry trade, you had excessive volatility, but that was coupled also with the unwind that we've seen in the equity markets. So when there was an analysis that we put out in terms of looking at the past 15 years of what drives the carry trade. And it really has been the fact of, what we're seeing in equity markets, the stability of the yuan. That has always been the consistent support for carry trades.
What about whether we're going to get support from Ueda verbally next week in Parliament that would, kind of keep this fueled along?
Yeah, absolutely. We saw that earlier last week when late last week when Deputy Governor Yoshida even brought in the line of being a little bit more cautious. And we have to remember Ueda's going to the diet. He's going to placate a lot of the fears, especially because of the volatility was so high in the equity markets. So what we will see is obviously they're going to take a more cautious approach, but we still have to remember that he did take that tightening GD out of the bottle. And so, but it's just going to be a lot more measured, and he'll always have the equity market volatility in mind.
And this is also a man who, since he got the top job at the BOJ, has been very clear in his stance. He wants to dismantle this unconventional monetary policy. So how much conviction do you think we potentially can expect from him going forward?
Yeah, it's fair enough because obviously they're using ultra-accommodative policy. We saw from yesterday's GDP numbers that growth is actually not that bad. So you're seeing this reflation story come back, although it's still too early to tell because we've had GDP and not so great for some time. But one key thing from all the data that has been consistent is the fact that we are seeing homegrown inflation, and that's been indicated by the GDP deflator. And that is telling us that they can start setting the stage from going from ultra-accommodative policy and start normalizing policy.
So what number are we looking at in terms of the Japanese inflation print next Friday to kind of fuel that along?
It just has to make sure that it beats expectations in terms of if you see a beat in expectations, there's going to be this concern of, more tightening to come, right? But again, I think the way the BOJ often works is that it does take a very gradual approach. And of course, after that volatility, the pressure that Ueda is likely getting from the government, that's going to be reinforced that everything is going to be gradual.
So their concentration on that tightening and normalization likely to continue. What is your sense of where that eventually leaves the Japanese currency?
Yeah, I think so. I don't think we're going back to 160. I think on dollar yen, 160 seems a little bit far-fetched now. Now, especially with not only that the BOJ is going to start tightening and gave us clear forward guidance that it would start tightening, but also because the Fed is going to start easing, right? So 160 doesn't look as plausible anymore. I think where you end up is where the forwards are. So around 145, in that range, where 140, 145, you start seeing the yen settle around there. You'll see blips and you'll see variations around there. But I think that's your new normal range, which is still relatively weak. It's just not 160.
Right. And we are also on the other side of that, seeing a bit of those aggressive Fed easing bets being pared back. What is your sense of whether everything has properly been priced in by the markets already?
Yeah, I think one of the key things is that traders have, especially when it comes to the Fed pricing, really have been wrong this year in general. We started the year with 7 cuts, and then we went down to maybe only about 2 cuts. So there's been massive sways, and that's largely because of the fact that the Fed has been focused on data dependency. We don't have clear forward guidance from the Fed, so obviously you have to overreact to every single data that comes out. And of course, we saw that with the non-farm payroll numbers, where the markets moved to price in 50 basis points because of fears of a recession. Those fears have been largely allayed because now we've seen that the U.S. consumer is holding up extremely well from yesterday's retail sales numbers. So, and then also jobless claims are showing that the job market isn't deteriorating as fast as markets markets had initially thought. So I think what we get, especially from Jackson Hole coming up next week, is an indication that, yes, we're moving towards easing, but a jumbo-sized cut in September looks unlikely, especially the way the data is playing out.
Increasingly unlikely. We still have a whole round, I mean, to your point, whole round of data in the next month before that, though. So what do we actually need to see that not too hot, not too cold kind of scenario continuing to play out?
Absolutely. So the key one will be the job market, right? So another non-farm payroll number. Do we see another uptick in unemployment rate? That obviously is going to stoke fears of a recession because of, and of course, we always have to remember that the Fed goes back to the dual mandate. And we've seen some of the Fed rhetoric often concerned about what is happening in the labor market and the cracks. And of course, you can't leave rates at, at these current levels unless the economy is overheating. We're starting to see that being pared back quite significantly, and the job market is telling us that. So that being said, it really will come down to the labor market because we have seen signs of inflation cooling, but I don't think it's a prerequisite to start to really hold back, because we've seen in other G10 markets where central banks have started cutting even though inflation remains above target.
In the pecking order of G10 easing, do you think the Fed is going to trail behind what we see from the ECB then?
To some degree, I think that there will be, but again, it still comes back to what's happening with the labor market data, because that will accelerate. Because unlike the ECB and unlike the Bank of England, the Fed has a dual mandate on employment and inflation. And if those two are not hitting the mark, they're going to have to be a lot more aggressive. But so far, the upside is that retail sales and the consumer is holding up, which still makes up a big chunk of the U.S. economy, and we know that the U.S. isn't falling into a recession, so we're moving more towards a soft landing rather than a hard landing. But still, it'll come down to what is the labor market telling the Fed and how aggressive they have to move.
Talk to us about where you see the Treasuries curve then. How much further adjustment do you think is needed?
Yeah, I think you get a little bit of a pare back. So we had a really sharp rally over the last 3 months. Obviously from, the focus on the Fed easing coming a lot sooner than expected, that jumbo-sized cut for September coming through. So you had a really strong rally in Treasury markets. I think investors are going to start taking profit on these bets. I think you start seeing a little bit of an uptick, especially because so much bad news was priced in.
Mary, bad news, but great chatting with you. Thank you so much.
Thanks for having me.
Bloomberg's MLive strategist, Mary Nicola. Back to you, Paul.
All right, thanks, Avril. Just keeping an eye on that typhoon that we mentioned that is nearing Japan. Typhoon Ampul getting closer to Japan's main island of Honshu. It's already forced a number of flight cancellations. The government's also issuing warnings about possible landslides, flooding as well. Japan Airlines, All Nippon Airways have cancelled about 90 international flights so far. That's impacted about 15,000 passengers. Also 560 domestic routes scrapped so far as well. 104,000 travellers affected there. It's likely, says the government, that those flights are going to continue to be impacted through to the weekend, Saturday at least. Had a few train services disrupted as well. Bullet train services between Tokyo and Nagoya are going to be halted as that typhoon brings heavy rain and strong winds. Bullet trains through to Aomori in the north of Honshu also likely to be impacted. All right. We are also getting live pictures from Jokowi, giving his final State of the Nation speech as well as he prepares to leave office and hand over power to Prabowo. Jokowi also going to be delivering the budget, which is likely to get a deficit perilously close to the upper range. Also coming up, Axis Mutual Fund's going to be joining us. They say rate cuts from the RBI could help alleviate pressure on Indian lenders. Their CIO going to share more insights up next. This is Bloomberg.
genap 5 tahun Bapak Profesor Kiai Haji Ma'ruf Amin.
Okay, we've got some live pictures there of the Indonesian president giving his final State of the Nation address. This is it for Joko Widodo, popularly known as Jokowi. So this is his final State of the Nation address before he stands down. He has been president since 2014. Prior to that, he was the mayor of his hometown Solo, also known as Surakarta. So not just giving his final State of the Nation address, though, Avril, he's also going to be delivering the budget, and there might be some confronting numbers in there.
Yeah, and we're waiting to see what we get in terms of the big ticket spending going forward. Now, to your point about his legacy, I think it's also worth noting that he was the former Jakarta governor, and as part of this push to reinvigorate the Indonesian economy, part of the issue that he actually highlighted was how overcrowded the capital was. We know that Jakarta is a city that is sinking rapidly into the sea. There is overcrowding, there is traffic, there is congestion. And certainly one of the key pillars and push initiatives that he's been doing was to try and move the capital to Nusantara, the new capital city. The inauguration of that, of course, is set for tomorrow. And this is coming against some concern about whether the incoming leader, Prabowo Subianto, will continue to, actually pull through with some of Jokowi's policies and to continue the building of Nusantara. Paul.
Yes, in terms of the budget, this could be a bit of a shortfall there. I mean, obviously, building a new capital city is expensive and it's going to take quite some time. This year's budget, though, is expected to have a shortfall at the high end of the proposed range of 2.3 to 2.8% of GDP. In terms of legacy, the incoming President Prabowo has got a few ideas for legacy items that he'd like to spend on too, including a free meal program for children in Indonesia. That would cost $29 billion, so also certainly not cheap, although certainly likely to be a popular measure as well. We're also keeping an eye on one of Indonesia's near neighbours, Thailand. Of course, there's been a fair bit of political upheaval there. We are waiting on the vote for a new Prime Minister there. There is an 11-member coalition which holds a majority in Parliament. One of those coalition partners has nominated Paetongtarn Shinawatra, and if that name sounds familiar, yes, she is Thaksin Shinawatra's daughter. So she seems to be in the box seat right now, Avril.
Indeed. She is the daughter of Thaksin Shinawatra, who, of course, despite being previously exiled and coming back to Thailand, has still been playing a really influential role in Thai politics. And she's the youngest child of Thaksin Shinawatra. She is set to, if all goes well, become the youngest prime minister that Thailand has ever seen and the second female prime minister. This follows on from her aunt, Yingluck Shinawatra. Now, at stake here, of course, is against the backdrop of what we saw in the ousting, the disqualification of the former Prime Minister Srettha Thavisin after the Constitutional Court found him guilty of ethics violations. This is why we are in the situation that we are seeing. And of course, that vote counting continues.
All right, let's get over to India now and get more on Indian markets. We're joined by Ashish Gupta, CIO of Axis Mutual Fund. He's got 25 years of experience tracking equities and macroeconomics, and it's certainly a very good time to be following India at the moment. Ashish, we've had a huge run-up in the Sensex, better by 21% over the past year. When you look at these sorts of gains, yes, there is a compelling story underpinning them, but how sustainable is this?
Hi, good morning, Paul. No, I think India is in a good spot. The macro continues to be very strong at multiple levels. On the external level, the domestic fiscal policy, monetary policy is very prudent. Leverage levels in India are very low. So on this strong macro, over the last 3 years, we have had very strong earnings growth coming from corporate India. and corporate earnings have grown almost at a 24-25% CAGR over the past 3 years. And to our mind, that is what is reflected in the market returns. Of course, this also kind of brings us to the point that where we are today, multiples are no longer inexpensive, and we see some bit of slowdown in earnings growth this year compared to what we have tracked. So I think we are in a good spot, but we expect returns to be more moderate this year compared to the last couple of years.
Yes, valuation's not inexpensive. I think that does sound somewhat diplomatic. We've got more than 100 companies now trading at 50 times earnings. So are there any pockets there that look a little bit overvalued, a little bit overheated, where you might be tempted to take profit?
Sure. There are certainly pockets that are overvalued, and actually there are very few pockets that are undervalued. And we are seeing actually multiples continue to be elevated for some companies where growth outlook as well as margin upside is limited. And I don't think that is really sector specific. We are finding names where we want to take profits, even in some of the strongest themes out there, including industrials, even in some technology-related platform companies.
Ashish, what about small caps? Do you see them under or overperforming versus the broader indices?
So I think the debate about how stocks have performed basis market capitalization is very interesting, because today we see the small cap to large cap valuation premium that is almost 2.5 standard deviation higher than what we have witnessed historically. Small caps are trading nearly at a 40% premium to large caps. So there is a strong underpinning that large caps is probably the better part of the market to be positioned in today. Unfortunately, it's not as straightforward as that, because what we are seeing is that the earnings growth outlook in both these pockets of the market is very different. If we look at Nifty earnings that just got reported for the most recent quarter, the earnings growth was down to just about single digit. So the small caps are more expensive than large cap, but actually the growth outlook is much better. The sectors that small cap companies are representing are segments of the economy that are doing better than some of the larger segments. So I think
Ashish,
we have to
sorry to interrupt you, Ashish. We have about a minute left on the conversation, but just really wanted to get your quick thoughts, because you recently wrote a piece about the supply in stocks. How do you think that pace of supply is coming online, and how does that match up to demand? Just really quickly, please.
Sure. So I think the pace of supply has accelerated given that run-up in the valuations, and the pace of supply, that including secondary supply from stake sales by promoters and private equity, is now more than what is the inflows into domestic mutual funds. This supply is slated to go up further this year, just looking at the number of IPOs that have been filed with the regulator. So I think that is something that will bring some moderation in returns to the market.
All right, Ashish Gupta, CIO of Axis Mutual Fund, thanks so much for joining us. And that is it from Bloomberg Markets Asia. As we leave you, we do have stock indexes around the region closing up in positive territory at the moment. Horizons Middle East and Africa coming up next. This is Bloomberg.